Hello and good morning from Private Banking Advisory. Today is Tuesday, the 14th of March 2023. We are getting very close to the day when Julius Caesar was assassinated in ancient Rome. Let's hope this is not an omen for the stock markets or for the banking system in general. All the airwaves are full of analysis about what has happened to Silicon Valley Bank, to Signature Bank, and what might or could happen to other banks that are considered vulnerable. This is not just a United States situation, but it also can play out in Europe, as the example of Credit Suisse is showing in a dramatic fashion at the moment. Now, I would say a lot of mistakes have been made by banking regulators, by central banks that put too much easy money into the system and allowed speculation or forced some market participants to speculate in order to obtain any return on their money. But I would also say that in general, the whole structure of the banking system as we know it is generally very vulnerable, because what is actually happening is that banks take deposits that can go out of the door at relatively short notice. And with these deposits, they invest in securities, usually with a longer maturity, as the interest rate curve is usually positive. That means they pay less on their deposits and obtain a positive rate in comparison when they invest in slightly longer dated securities. So this is basically a yield curve maturity transformation. The same happens with lending they undertake to industries or to real estate investors. Basically, if they give a loan to a corporate or business client, it is not on a basis of very short maturity, and the loans cannot be called at a period of less than a year or 2 years. So basically, again, the bank is investing in longer maturities with money that is basically a shorter term basis. So the whole structure of the banking system, therefore, is a bit game of make-believe. Investors or depositors have the feeling that they can get access to their money at any time. But if all of them would try to get their money out of the bank at the same time, the bank is basically insolvent. Now, this is not due to bad management by the banks or even by the regulators. It is basically a feature of the traditional banking system as we know it in the West. And 90 to 95% of the time, this system works, confidence is existing, and everybody is happy and thinks no more about it, until the system gets to a point of stress, as we see at the moment when interest rates are going up in a relatively stratospheric fashion, from 0 to 3, 4, 5, or 6%, or even higher. So what can you as an investor do? In my opinion, you have to diversify your holdings in banks. Ideally, not above the limit that is set by the regulators, and that means the amount that is guaranteed by the government at any point in time. In the UK, that is about 85,000 pounds. In the United States, it's $250,000 per depositor in each bank. Now, This may be not a very good suggestion for those of you lucky enough to have much larger assets under control. And again, it is useful, in my opinion, to put money to work in actual assets, whether it's property, whether it is shares, whether it's direct holdings of secure government bonds or even secure corporate bonds, in case you can find any of those. And not rely on one institution or even one private bank or even one broker for all your assets. In my opinion, this crisis is maybe a little bit overblown, but safety first is my recommendation. And I'm happy to talk to any of you who need some direct advice. Remember, we are not authorized to give specific investment advice. I cannot tell you which shares to buy or which bond to buy, but I can help with risk management, measuring the performance of your portfolio so that you are sure that your private banker or fund manager is doing the best possible job for you, and also analysis of all the costs that are related to managing your money. That can be transaction fees, custody fees, annual management fees, performance fees. So if you want some help, please get in touch. I offer very reasonable rates on an hourly basis that are compared to what a quality medical professional here in London would charge for any consultation. Thank you very much and hope to speak to you soon.